you're doing well. Back to Monday and the 26th of September 2022. The risk calculation is off, and so it's quite skewed, that metric. So for every one person who are selling, there's nearly 8 people buying risk. So that's really unusual. Normally they're bearish, and now they're very bullish. And because they're counter trend, we've got to do the opposite of those guys, and they need to be squished. And it looks like they're going to hold, which is a bit bonkers, but that's the retail guys for you. I think we're dealing with apes now and not sheep. But I'm not going to go on a rant today because I want to make it a nice quick video. If I go on a rant, then it'll be like a 14 minute video. I don't want to do that. But it's just to say that we're now dealing with a different type of retail trader. So that's important. The apes hold on, and they've got terrible risk management. And that's why we're seeing such skew on the metric, the SSI. And yield pump, so that's risk off. As you know, this supports a stronger USD, especially if the near-term pump. That's really indicative of a stronger USD. And, you know, you can see why the dollar strengthens, because it's a safe haven. And this is a flight to safety. So there's a connection between the yields and the USD. This is absolutely bonkers, and this is risk off, but we knew that we were going to be risk off from this yield curve inversion, and a very, very unnatural curve. So that's pumping too much. So that's that. So that was risk off, but at least we had the heads up. You know, that's one thing. Now, so the thing is with this is why when I looked at this morning, this was a big clue to tell me to avoid trading today, because the New Zealand US dollar is making a buy on the dynamic, but it totally does not agree with what we're seeing on the fundamentals. This stuff, all right? We're risk off, but it's saying, you know, it's a dynamic buy. So I don't know. This is like a warning sign for me. When I saw that, I was like, no way. Sentimentally, it could be, but fundamentally not, because the Kiwi is vastly riskier than USD. GJ is a sell, so that would make sense fundamentally speaking. Oil is a slight sell there, but just be careful. That was one of the warning signs that I saw. And well, King dollar, basically Hulk mode, Hulk smash. The pound USD is absolutely ridiculous. Yeah, it fell 500 pips overnight. And did it flush the retail guys out? No. So that's scary. So we're dealing with apes, and those apes are going to screw everybody. So I'll try not to go on a rant, but it is quite frustrating because we want to be trading the sentiment, but if they hold on to their losses and they don't get stopped out, then it's going to continue to punish them, and we'll probably break parity. You know, so you've got to be careful. There's the big move on the GU on the weekly, huge move. The reason for a pound to falter was that the finance minister has doubled the borrowing for the government. So that's adding to inflation pressure. And the rest of the world didn't particularly like that very much, and they punished the pound. And so I went to freefall mode on Friday, and it was one of the worst performing days ever. And the 5-year gilt had its biggest move in history. Okay, so we're dealing with fundamental stuff. They're telling you to be very, very, very careful. And yeah, the UK gilts, they exploded back on this inflation-inducing statement that he made. And we don't want more inflation at all, right? No trade of the day, so that's important to note. Nothing today, just because you look at your ADR, your average daily range on any FX pair, and it's very, very wide, and that tells us that volatility is too high. So if you want to join, here's the link there. Remember to sign up on the 1st of October, because if you sign up now, then you'll pay today, and then you'll pay on the 1st of October. So it won't be worth you doing. You might as well wait till the 1st, okay? So just so you know, you feel like you've been double billed if you join today, because you'll pay today and then on the 1st. So wait for the October. Yeah, so they're long nearly everything. There's S&P with the 21 moving average pointing down, and it's acting as a resistance. They're short UC, UJ, EJ, and EG, and AJ. But they're long everything else, right? Very skewy. Right, they went long on the S&P, so I'm going to do a quick 2-minute video for the private feed to see what happens here. I'll have to wait and see. I might time it for the 8 o'clock London Open, to be honest. It'd be a better representation of what's going on. But they went long, so that would be a sell. And I've got a feeling they're going to buy this dip because we're dealing with apes, and apes are pretty stupid, and they've got terrible risk management, and they're probably in so much drawdown, they're probably looking to break even, so they're probably looking to buy, I'd imagine, and if they do, it'll be a sell. Sell, breaking that support. Remember I was saying how fundamentally horrible this was as well because of the Russia-Ukraine thing, and we've got Italian elections. The far-right party looks like they've won, so that's fundamentally bearish. So that's, yeah, you probably want to be careful with this. It's going to probably continue lower. And gold, now it's making a risky buy, but I don't trust it. I don't trust this. At the high level, we're very much sell because we're 68%. And also they ticked up as well. They ticked up. They bought that dip here. I wouldn't trust this. And for this reason, from all these things that I'm seeing, it tells me to be very, very careful. And so I'm going to be out today. No trades, I think. And another thing that added to the concern was that EU and GU took their stop loss clusters above while making this table. And it shouldn't have gone up to take their stops above, and it did. So it rinsed stops below really, really heavily, and it pumped to take the stops above. So it's just a stop hunt on both sides. It's a bi-directional stop hunt on EU and GU. So that's another reason to be very careful and to avoid today and come back tomorrow. It's a shame because we had a nice setup to use using the FX as SI indicators, and I wouldn't want to do it today because it wouldn't be a fair test because things are very out of bonk and they're quite skewy. Largest mover was AU for a sell, 7%. Quite a big shift, and that adds to the big picture. Location, the largest stop loss cluster is EA, and it's there, 14970, and the size is 3.14. Fairly large, and this is abysmal. So, they would want this above 50%. 28% failure rate is not good because it tells us that the retail guys are currently getting paid on their bias. And Kiwi's got a 0 score. That's probably really hurting our failure rate is the Kiwi. So just be careful, I think. You wouldn't want to enter now as you might as well go to a casino because you put your money on roulette, you'll get better odds, vastly better odds than that. That's just terrible. So wait for this to improve. It might just be very low all day today. Signals, so wrap up of last week. We had AN, Monday, Tuesday. I was surprised by the success of it on Tuesday because Monday was so good. It continued and it was like a freight train. We did very, very well on Aussie Kiwi. Pound Kiwi, it didn't really do much. Kiwi CAD, it didn't really do much. But on Friday, this did well. And I did actually hold from the day prior. And so I was up quite a bit, which is quite cool. Weekly total 194, which is pretty excellent. And there's Kiwi CAD, and it did really fall. And a lot of things did fall on Friday. And pound USD was absolutely bonkers. So we start in week 91. And technical checks were extreme again. And so that's that. Nothing to be said there. Just be careful if you're going to be going against the technicals because these are quite strong. Economic calendar, IFO business climate, and we've got durable goods tomorrow and home sales. We've got a speech from ECB tomorrow as well. So I'm going to wrap up now. I'm going to probably wait till 8 o'clock open, maybe make a cup of coffee, and then we can do a 2-minute, 3-minute video on the indices for the private feed. So be very, very careful today and keep calm. And don't feel like you have to trade as well. Just watch because today is going to be pretty bonkers. And so that's it. Just remember capital preservation. That's the key. And by trading today, you're risking your capital, I think, by the looks of it. It looks like a bit of a gamble, especially with that failure rate. You wouldn't want to enter. You wouldn't want to enter now. It's just it's abysmal. So I'll speak to you guys tomorrow. Well, I'm going to do a COT data video now. I just reminded myself. So I'll speak to you for that COT video.